First of all, good afternoon to everyone, and a warm welcome to today's webinar on Invest Smarter, Build Stronger, Due Diligence in the E-Mobility Ecosystem. I am Vedanti, and I'll be setting the stage for today's conversation. So, before getting into the depth of today's discussion, for those who may be new to us, eManifold works closely with industries, governments, multilaterals, investors on e-mobility, clean energy, transport, hydrogen, and sustainability. And over the years, we have been very fortunate to work on numerous projects across more than 60 countries globally. And much of our work happens on the ground, supporting organizations to solve the real challenges of deploying and scaling clean technologies and supporting them through strategy, technical due diligence, and system level consulting. So that's about it. EVA is a sister company. Uh, it focuses majorly on capacity building and industry aligned courses, which comes from the applied learning of the consulting projects from P Manifold and the knowledge from our parent company, P Manifold. And this enables professionals and organizations to stay ahead in the evolving mobility and energy ecosystem. Over the next hour, we have an outstanding panel joining us, each bringing different point on what it really takes to validate a mobility investment partnership before committing a capital. And if you have questions as we go, please drop them into the chat since we'll have a dedicated Q&A segment towards the end. And also be ready to participate in a few rapid fire quizzes throughout the session. So let's set the stage. Starting with where we are currently, from a very recent IEEFA and Traction report, India's EV sector drew around $25.6 billion investment in all between 2020 and 2025. And in this, startup funding alone crossed $2 billion in financial year 25-26 for the very first. Now we know that money is moving into this space faster than into almost any other corner of the mobility. Many ventures have strong growth stories, but when we look closer, several struggle with scalability, unit economics, supply chain resilience, or even basic technology readiness. And the market itself is picking up on this. In 2025, the number of EV funding deals in India have halved compared to the year before, even as total capital rose to 27%. With fewer bets and bigger checks, now there is far more scrutiny. Now, that gap is exactly why investors, OEMs, lenders, and fleet operators are shifting from belief based decision making to the evidence based one. So, the real question here is which of the bets can actually scale in this sector? Now, so what happens when the validation doesn't happen? Across industries, investment failures usually trace back to the assumptions that were never properly tested. And these factors are deeply interconnected and missing. Even one shows up fast in the form of delayed scale ups, cost overruns, product failures, and even damage to the market credibility of the company. In the discussion ahead, we shall explore answers to these questions as to what gets overlooked and what actually happens when due diligence is missing. Now, this is exactly where technical due diligence comes in, not just as a compliance checkbox, but as a strategic enabler. So, in today's discussion, we shall explore how technical due diligence answers whether a technology can actually perform, scale, or sustain, and how commercial due diligence evaluates whether the business model, the market opportunity, and the economics can support the long term success, and how together they can help stakeholders move beyond pitch decks and projections to enable smarter investments, stronger partnerships, and lower risks with faster growth. So the real question today isn't whether due diligence should be done as it was a few years back. Now it is how early and how effectively it should be done. So with this context, I'll take a moment to introduce our excellent panelists with us. We have Mr. Jain Deshmukh. He is an e-mobility expert with over 30 years of experience in public transport operations, depot management. And he is a distinguished e-mobility expert specializing in e-bus operations, maintenance, depot infrastructure, as well as capacity building. Then we have Mr. Pradyumna Nath. He is the founder and CEO of Frequent Advisory based in Bangalore. He has an extensive experience for more than 15 years advising growth stage companies, investment funds, infrastructure initiatives, and development programs across India, Southeast Asia, Africa, and global markets. Then we have Mr. Gagan Mathur, who is Head of Business Development, E-Mobility at Gulf Point. He has over 20 years of experience in venture investing, startup scaling, and business transformation. He is a seasoned investor and strategic advisor focused on identifying and nurturing growth, technology, and sustainability driven venture. Last but not the least, we have Mr. Manoj Gupta, CEO for EcoFuel EV charging technologies for JBM Group. He has over 25 years of rich experience in the automotive and mobility industry. Manoj sir is a seasoned OEM leader driving the transition towards sustainable transportation and e-mobility solutions. Now, with that, I'll hand it over to our moderator, Mrs. C.A. Sunaina Agarwal, who will take us through how experts evaluate technologies and how all these assessments shape successful outcomes across the e-mobility ecosystem. With this, I'll hand it over to you, Sunaina.
Yes, thank you, Vedanti. Thank you for setting up the context for the entire discussion and introducing all our panelists. Good afternoon, everyone, and welcome for today's webinar. I'm CA Sunaina Agarwal, leading business development, new opportunities with P Manifold and EV Acad. And I shall be moderating today's insightful session with our esteemed panelists, Jain Deshmukh sir, Pradyumna, Gagan Mathur sir, and Manoj Gupta sir. The e-mobility industry is evolving rapidly, now with growing investments, new technologies, and emerging business models. But with these opportunities comes very important question around technology readiness, scalability, commercial viability, and long-term success. So today's discussion will focus on how technical and commercial due diligence can help stakeholders make smarter decisions, manage risk, and identify value creation opportunities across the EV ecosystem. To explore this, we have this distinguished panel bringing us the four key perspectives: the technical consultant perspective, financial perspective, investor perspective, and an OEM industry perspective. Before we begin, I would like to share a quick note with our audience. We have curated a set of questions for our distinguished panelists, and we will be taking audience questions towards the end of the webinar during the Q&A session. In the meantime, please feel free to post all your questions in the Q&A section and at any point during the discussion. Our panelists may respond to some of them directly as the conversation progresses, and we will take as many of the remaining questions as possible in the dedicated Q&A segment at the end. So do keep your questions coming in. We look forward to a very engaging and interactive discussion with every one of you. So let's begin. Jain sir, let me start with you. So from a technical perspective, what validation factors give you confidence that an EV technology can scale successfully in the market?
So good afternoon, everybody. Good afternoon, Sunaina, for our introduction. So if we talk about EV sector, there are a number of factors which significantly impact the valuation and investability when it comes to startup. So I will list out few of the factors that based on my practical experience working on the ground. The first important factor, what I feel, is the indigenization. So indigenization plays a very, very important role when it comes to validation factors. So when you talk about the electric vehicle, so since I am working in the buses, so electrical vehicle, we have body structure which is completely indigenization. Then we have power electronics which is partly indigenized. Then we have battery in the pack level, we have indigenized it, but cell level it is not there. And the other mechanical components we have indigenized it. But basic, what I feel is the software part. The software plays a very, very important role. But when you talk about electric bus, it is generally we say it is a computer on the wheels. So it's whole of software. So what we have seen on the field is number of issues have been resolved just by upgrading the software or flashing the software. So while developing the software, whether we have that R&D capabilities to develop that type of software which is suits the local operating conditions. So that capability plays a very, very important role when it comes to validation factors or giving that confidence. So indigenization is the first factor what I feel is. Then the scalability of manufacturing and supply chain. So we should have that infrastructure for scalability. When you talk about bus, it requires a huge infrastructure. Then availability of the components, then the supply chain. So supply chain, the more the indigenization we have, more the components are available in the during the production processes. And the second important thing is the quality, because what we have seen is there should be a consistent quality. Making a prototype is different, and maintaining that quality plays a very important role comes to giving that confidence to the investors also and to the end users also. Third very important component what I feel is regulatory and certification compliances. So basically we have seen certain products which are lying at the regulatory end from years together because they are not able to get certification or register, they are not able to clear that certification part. So if you are taking all this process, this regulatory requirement, everybody knows during the initial manufacturing stage itself. So if this regulatory, all the requirements, regulatory certification part is taken into consideration during the manufacturing process itself, then this type of situation will not happen. If the vehicle gets stuck up during the regulation part, it loses that confidence. So investors will lose confidence, then the manufacturers will also, then end users also lose confidence because there are there are certain products which were introduced in a big way, but they were not able to complete the certification processes. So certification requirement also plays a very important role. Then comes the safety validation. It comes with the compliance of automotive safety standards and regulations, testings, thermal runaway protection, electrical safety, crash worthiness, fire protection. So many things are there. If you see government regulations, recently also they have come up a lot of amendments in the various regulations to ensure that the safety standards are maintained based on the experiences of thermal runaway cases. They have come up with a very stringent safety conditions. So if your product, if your vehicle is able to comply with all these safety standards, then definitely it is going to give that confidence to the investors also and for the end users also. So these are all various factors such as indigenization, scalability, regulatory compliances, safety validation. This plays a very important role when it comes to giving the confidence to the market and for scalability of the product also.
Thank you so much, Jen sir. So this is a great foundation laid that indigenization, quality maintenance, regulatory and certificate compliances, safety standard, these all play really very important role when it comes to scalability. So let's go next. Pradyumna, I would like to come to you. Pradyumna, given that what important pointers are there for scalability from the technical perspective, I would like to understand from a commercial due diligence perspective, what are most common assumptions in the EV business plans that fail under the real market conditions, and how can they be stress tested?
Hmm. No, I think a lot of it actually kind of is highly interconnected to what Dr. Jain said. If we split it up into four specific segments, right, that we are looking at e-mobility. If you look at the first one, which is actual EV play, I think a large part of it was about the fact that market share is going to be something that will continue to grow for any of the larger players, right? So I think that got tested significantly, and there is no follow through in terms of service network. So it's a big realization, right? The fact that early growth does not determine your future success. The second thing is to the supply, or whether the supply will catch up to the demand, right? And that's also probably where the infrastructure play comes in. So you're seeing that infrastructure adoption has still not significantly increased, or the utilization has still not significantly increased, and they're barely trying to stay afloat, right, till the time that they're able to. Because if you're not able to get enough utilization at a per charging point level, then you more or less are just a really expensive billboard for the company, right? So that kind of also ties down what the business can really do. The bit around the battery part, I think, is very close to what Mr. Jayant said just now, because battery chemistry keeps improving, right? Cyclically, it's like semiconductors; it keeps improving. But the adoption of it is going to still be defined by a number of clinical or technical trials that they need to be able to complete and put the vehicle onto the road, right? So similar to like a pharma industry, but it's on steroids, right? You have to move really quickly. You have to move in 1 year, 6 month time frames to be able to put something novel. But beyond all of this, I think the largest point that affects most of these guys is whether they're able to move quickly from the early adopters to the late majority, right? It has shown that early adopters were very enthused by some of the subsidies that they received. But that can't be a market reality forever because subsidies to incentivize early adopters in an industry which could potentially have a lot of economic multiplier effects. But going beyond that, I think, when we do from a commercial diligence standpoint, we do stress test its affordability in a non-subsidy environment, right? So that's going to be something very critical. Uh, so, like to sum up whatever I kind of said, I think it's a significant move because India, being one of the earliest adopters and one of the largest, quickest adopters of EV itself, I think some of the challenges that it faces are also some of the plans that were laid out that didn't go as they were supposed to. So, a lot of the diligence is to be able to actually identify what will work in the long run as compared to what feels like a reality in the short run.
Thank you, Pradyumna. That's really interesting. So, like even the strong plans around the affordability, the market, the battery infrastructure adoption. So, if kind of the companies are not very much ready on this part, if the commercial realities are overlooked, they can really face problems going ahead. So, Gagan sir, like we have now a perspective from a technical validation point of view. We have a commercial aspect, as stated by Pradyumna here. So, as I come to you next, I would like to understand, like as an investor, how do you evaluate opportunities across the EV ecosystem? Like what role does technical due diligence play in shaping this investment decisions, and which technical factors tend to influence the investors' confidence the most?
I think, Vedanti and Sunaina, and of course, Jayant and Pradyumna. I think Jayant and Pradyumna have aptly stated the role of, both the technical and the commercial due diligence. But from an investor perspective, firstly, let me start by saying that, the EV story is still intact. I don't think it's that gloom, even though the investments would have halved, as you said. But, it's more of a very intelligent investment right now. And you will see that, going forward, this story will continue. So to that extent, I think the growth story is still there. Having said that, I think from an investor perspective, what's really more important is to understand what's happening in the industry today. Three basic factors we already stated earlier, but let me just reiterate. One is technology is changing. So what works today may not work tomorrow. The technology is getting upgraded. You see that in even the cars which are there, the buses, even the component manufacturers, battery manufacturers, etc. The other is that there are regulatory aspects which are coming up. The government is also, everything is a very evolving field. Even the government, certain regulatory bodies are now coming up with certain requirements. Safety is one of the important parameters. So what was not there 3 years back is now coming up. Even if you see from the subsidy point of view, there is a PMP guideline, etc., localization, and so on. Third most important is competitive forces. So what's very important for us to understand is that competition is here to stay and it is increasing. You saw that in the two-wheeler and you saw some consolidation happening. You're seeing that in the bus segment right now. You're seeing in practically every segment in the automobile industry, in the e-mobility industry, and it'll even now come to the construction segment. But having said that, I think from an investor perspective, see, first thing, the vision should be very clear. We are not, if the investor is a climate fund, they've got a tick box to do some ESG, then, you've seen earlier what has happened is investments have, really happened fast. But from an organization perspective, the organization vision is very important as to why the organization wants to invest. What does it want to achieve with this? What are the synergies? A synergy perspective is very, very important in this. And that's where, many of the companies kind of spend a lot of time in understanding why they want to invest, what is the synergy. Having said that, the role of technical due diligence becomes very, very predominant because, as I said, one of these factors are changing in the industry. Second is from a company perspective, the technical DD, as you call it, is more like an insurance person. You're actually buying an insurance because one is you're validating the field data. It's not just what they said. You're not believing their story, but you're at least validating them. So you go to the field, you validate, hear from the customers, what is the customer confidence in the product, whether unit economics are there, does it make sense for it to kind of scale up. Scalability is an important. Are there necessary certifications in place? Because many times you find out eventually that many of the certifications aren't there. Compliance is a very, very important. Compliances, and something which is also missed out somewhere is the cybersecurity part, because with this whole world of information, how the technological moat is able to kind of remain there. And most important is, what is your entry barrier? So from a technical standpoint also, what are the risks there in the technology? What is the entry barrier? How long you think this technology will survive, and what is your plan B? So that's very important. So these are some of the factors in the technical DD which take place. And in many organizations, especially the organization which I work in, the technical DD is one of the most important factors, because everything else comes later. The commercial, the legal, family, this and that. But the technical DD is something which is a no-brainer. It has to go through. So to that extent, I think it's a very important parameter. Yeah.
Yes. Thank you. Thank you so much, Gagan sir. That is a very important perspective that we have received from an investor lens as to how the synergies between the company and the investor is important, and how the technical due diligence is going to bring in that essence of the initial trust building is what this TDD will bring out, so that the investors are able to trust upon the clients given whatever they are claiming on. So this is really helpful. So now let's have some insights on the industry, which is also one of the most important stakeholder actually here in this entire screening and in this entire activity. Manoj sir, so from OEM and an industry perspective, I would like to ask you that what are the most common blind spots that organizations encounter during the technical or a commercial due diligence in the e-mobility sector?
So, Snehna, and I believe all my co-panelists have already covered quite big highlights which are important. Let me simplify it in a non-technical way. This subject, it actually need a very different way of looking at the whole overall perspective. First thing, we all know about KYC. We are talking about investment, due diligence, and everything, and we know our individual KYC. So this business, need 5 C's of that KYC. To start with, KYC stand for know your country. Very important. Second point, know your company. Third point, know your customer. Fourth point, know your currency. And the last, know your communication. All these 5 C is actually defined real gameplay कि at least when you are started your visioning or creating a mission for yourself, are you really talking on a very practical ground, or you are just becoming a part of a hype कि me too. So these fundamental will set the tone in terms of day one, very clear clarity. Second perspective, once we are clear about these 5 C, there is a tip now. We are in a technology era which is in a transition and a transformation both at par. And it's happening globally, not only just in India. And at a scale, we are leading it actually. And we have to, start change that conversation. We are a follower country. Now we are a leading country because the kind of benchmarking exposure we as a country are getting into. Nobody in the world has that kind of a exposure today, which we need to leverage from a multiple aspect of defining from a technology perspective, the standards perspective, the product innovation perspective, the service model perspective. So what is that tip? Very clearly, we should know what is the technology adaptation we are going to bring on ground with all associated its risk, because anything and everything come with the risk as a most important due diligence. Risk is not just about financial risk due diligence. At every single thing in this whole integration, every dot is a risk. We need to work out its mitigation, its understanding, its assumption. Second thing, this whole ecosystem, I am part of it since 2018, and before that, even in the battery since 2014. You know, the only survival and the understanding is what kind of business model you are adopting. When you are very clear about doing this business, so it's not a normal conventional business model and a practice. Taking the case of a e-bus, kind of a electrification of the public transportation, and now coming to other sectors. Why it becomes a success story in India and in a very successful way. Otherwise, we all know the history. Our STUs are not so much, mature in terms of adopting new such systems. It's thanks to our Government of India policy initiative, Niti Aayog business model, integrating all the stakeholders and bringing up viability gap fundings. More than that, bringing up the ownership and responsibility and owners to one to execute it on ground from a manufacturing, from operation, from a charging, from a long-term contract perspective. So what that means? This business cannot survive on the fundamental of a trading mindset. The way we always look ahead as a jugaad, this business needs a sustainable mindset from a planning stage till its sustainable stage of end of life. If we cannot think today for the next 15 years, what will happen and what will be our plan to actual strategy, how we are going to maintain that, it's going to be a very high risk business model. Now, when we evaluate all those fundamentals, when we create all those things, what make any business to survive and lead from the front? Thanks to the technology again, intervention of digitization, AI, and all kind of a best possible tools, because this is not just a product, service, or a closed door business model. It is practically from a manufacturing excellence to an operational excellence, which we need to achieve every second, because this is a business of time management. Any such thing when we talk about in e-mobility, if it is a vehicle, it has to keep moving. So it cannot stop. The charging, it has to pass on the current. It cannot be, unused. So everything, how much time? So that define your sustainable business model, practice, and survivability. Second thing, any such business, its actualization is in the monetization. And for monetization, health of your end-to-end network becomes very critical in all aspects. So how that network will become your real asset. It's not about a one product, two product, three product. It's the network asset. If you go back in the other co-industries like of telecom, we talk about digital infrastructure, we talk about telecom infrastructure, tower infrastructure. All those all are the kind of a reference industries which have been built over a period and become monetizable asset. Same applies over here. How well you maintain that, both in terms of health of those assets, then operational data of those assets, which should be credible, which should be monitored with the command and control way to operate your network in such a fashion, because we cannot afford to miss even a single circuit during the 24/7 operation. We all have experienced the ongoing war like US and Iran. Everything is struggling around the energy security. So this is our energy. And this is where the whole talks how we can secure our future by adopting an alternate fuel. And this is where we all are moving. So protection of this, whether it's from cybersecurity or from the infrastructure quality or from its continuity of operation, what is that redundancy in the framework? You cannot afford to say, I have made this system, but there is no redundancy in the plan. I have made the system. I cannot do anything because I am dependent on some other country who cannot support me. So this is a very much local subject. So whatever our government of India is trying to advocate is not just for something hype. It's a reality for your own business, how you will survive. Because ultimately it is not just about bringing up something and showcasing and then doing some buying selling. It's about practically every day doing that hand holding with that systems. So ultimately, how well the whole ecosystem, whatever we are going to operate in this business, including of your technology sustainability with plan B and C to adopt. Then in terms of your scalability in the network, how well it can be well equipped with backward and forward integration, because our grid modernization is also evolving. And then OpEx in terms of whatever cost you have taken from a metering today, tomorrow, what are the best possible scenario, whether BESS or renewable or whatever alternate mode. Because the investors, the global investor, everybody want to be a sustainable and with the green funding source and the cost of money. How all those things will happen if you plan today that sustainable network with the ESG and all those compliances in place, then we can say in India, we have developed an advanced e-mobility infrastructure, which is ready not just for today, but for the sake of tomorrow's India, taking it to developed country with the net zero objective. Thank you very much.
Thank you so much, Manoj sir. This has really been a very good insights from you from the industry perspective, giving all those ideas as to what are the important pointers for an industry so that they are able to scale properly and they are able to be successful in their own ventures. So if I were to summarize this first round, so technical scalability in the EVs depend upon factors such as indigenization, software, R&D capabilities, manufacturing, scalability, quality, consistency, regulatory compliances, as was stated by Jain sir. Then the technical due diligence is helping in validating these factors. So commercial due diligence will help in assessing the market readiness, the infrastructure, affordability, business sustainability, and the other long-term growth potentials to build the investors' confidence. So ultimately, success in e-mobility is not just determined by any of the innovations alone, but it requires a combination of technical robustness, commercial viability, investors' confidence, and overall operational readiness from the industry. So these are really great insights, and as from coming from all the four key stakeholders in this entire activity. So now, as we move ahead, Jain sir, I would like to come back to you and understand. Like we often see EV companies gaining customer traction and attracting investors' interest. However, not all of them succeed in the long run. So, from a technical standpoint, what are some warning signs or red flags that investors and industry stakeholders should watch out before they place their bet on any of the companies?
So there are several red flags. Just I will mention around a couple of them. So first, foremost important, based on my practical experience working on the ground, technological reliability and maintainability. This plays a very, very important role. Because when you are manufacturing any product, how much technically it is reliable when it comes to on-ground conditions? Because typically in India, we see the temperature varies at very high temperature from 48 to 50 degrees at certain places and sub-zero at certain places also. So whether the technology which you have prepared, whether it is able to maintain that operating conditions. So breakdown, rate of breakdowns, whether this technology is causing lot of breakdowns, then how you are going to mitigation measures, what mitigation measures you have come up to arrest these breakdowns. Then availability of diagnostic tools, what types of tools are required. Then availability of technical manpower also. So whether technical manpower is available or not. Or even meantime failures also. So how we are going to reduce these failures. So all these things which come up into technological reliability. Second is maintainability. So whether the product we have manufactured, whether it is easy to maintain or not. Because on ground, what we have seen in number of cases, certain products have been managed on the prototype factory. But when it comes on the ground, there are a lot of issues which have come up. So in simple case, I have to mention it, one of the products I've recently been working with. So replacement of horn. So horn replacement should not be take more than 5 minutes. It's an electrical component. It may fail at any time. But in that design, the horn placement of horn was in such a way that it was very difficult to access that horn. So replacement of horn took more than 1 hour. So this is the way the things have been designed. So prototype it's okay, but when it comes to practical on ground, we have to imagine all those things, how the people on the ground they are going to maintain it. So this is one of the important red flag which I am going to mention when it comes to reliability, technical reliability and maintenance and maintainability. Second is the battery performance. So battery performance also, it's a lot of variation is there when it comes to real world situations. So more people are concerned with the range because since I'm working with so many OEMs, so many authorities also, and with some few bus operators also. So I'm on ground situation, I'm seeing it. So there are certain products operating on the same route, same operating conditions. They are getting good range, but there are certain products operating in the same condition, they are not able to give better range. So what is the reason for that? So battery technologies, everybody know it is evolving. So based on evaluation, we have to find out the solutions on what operating conditions, which type of technology is required, what type of driving practices are required when it comes to regeneration of energy. So what I have seen practically that when many OEMs are not very much giving training on when it comes to regeneration part. So many things are there. So these are the red flags which imparting the training or imparting the technology know-how to the end users. This is one of the red flags which needs to be highlighted. Then third, what I generally see is lack of scalable manufacturing engineering readiness. Prototypes have been built with all good conditions. When you see a prototype vehicle, all the components are nicely placed. So wiring, routing of wiring, everything is fine. But when it comes to manufacturing with thousands of or hundreds of vehicles, so we see a lot of inconsistency in the quality part. So since I am involved in the pre-delivery inspection of number of vehicles, I have seen that. So routing of wiring, so clamping of pipes. So many variations are there when it comes to consistent quality is a very important. So these three or four, what I feel on the ground are the red flags, which I think the investors also or the OEMs also or the end users also need to be taken into consideration. Thank you.
Yes, thank you, Jen sir, for highlighting these red flags. So, just the technical validation itself is going to, help us identify the risk that lie beneath the surface. So, to identify these surfaces. So, Pradyumna, coming next to you. So, like Jen sir shared us the technical red flags, basically the technological reliability and compatibility, battery performances, consistency. So, I would like to ask from a financial perspective, beyond revenue growth projections, which commercial indicators best predict the long-term success or failure of an e-mobility venture?
Mhm. So I think so. So then a very interesting day. I think Jain sir very nicely kind of spoke about it. I just tried to paraphrase, what he said because that has a significant commercial angle as well. it's like a three-legged stool, right? So you have a market or user readiness, you have a technology readiness, and you have an infrastructure readiness. Now, when it comes to from a market readiness standpoint, so for example, if let's say 150,000 hours is what you expect from a battery, now the question at the commercial level is whether somebody will be ready to underwrite that 150,000 battery and see whether it's put to use. Will they be ready to insure it? Those are the kind of things that commercially we look at, because that's the most important part when you see how it's put to use. But from a consumer standpoint, TCO is the single significant indicator of how affordable is it to for somebody to adopt that particular product, right? So something that seems quite easy, like a lot of the companies, especially the really large brand ones, uh, try to subsidize the cost of getting in, but tried to run it with the similar unit economics as an ICE engine, but failed because they were not able to capture the value beyond the sale, right? Because a lot of whatever happens, 60 to 70% of margins actually come from post-sale servicing and maintenance, right? Which is not necessarily the same kind of reality with EV, at least the way it was positioned. So that's one of the significant things. The second thing is, how much does it cost you actually to put that value out, right? Which also kind of alludes to what Mr. Manoj and Mr. Jayant were saying, which is like, in order for me to serve that, am I production grade, or am I engineering ready to be able to consistently put out a good product at a predictable price, right? Even if I don't have it at the current scale, will I be able to consistently be able to work to reduce it to deliver it at a predictable price range? That's another significant thing that we look at. And another gap that we see, which we try to fix from a commercial standpoint, is while there is readiness and there are a number of market players which you're building a business plan based out of, let's say, for example, a subsidy or a grant or a government scheme, the challenge becomes how much of it is actually available in the short term, right? In the long term, everybody has, money laid out earmarked towards this. But how much of it can I access in the short term? That becomes critically important. The last bit that we see is the ability to actually scale business operations, right? So whether it is the current management team, whether it is the current manufacturing facility, whether it's the current distribution points or it's the current partnerships, can they scale at the same pace as the market? Right? Because many of the times, if they're not able to scale as fast, they also open up an opportunity for the competition to come in and occupy some of that market share. And it might be too late for you to change things around to get there. And the last bit is, how durable is your pricing and revenue, right? So because most of them are kind of built on certain early adopter signals, but when you actually go out to the mainstream user of a particular EV, it might not be tenable, right? So, while it was something that works in two-wheeler is completely different when it comes to three-wheeler, some completely different when it comes to buses. Now, all of these have very different decision-making cycles, and understanding them is critically important. But one of the lenses that we keep in mind is most of these organizations function like a technology company first, not like an auto manufacturer, right? So auto manufacturers have been there for 20, 30, 40 years and perfect the art of how to make a vehicle. Many of the other companies in the EV space are relatively newer, if not already supported by one of the larger auto giants behind them. They're still operating in a way that they're evolving their product and proposition continually. So we always keep that curve in mind, because sometimes it affects a lot of the assumptions that a business plan is made on. Only one portion of it is actually the financial projections. A large part of it is going to be the business viability itself.
Thank you, Pradyumna. So there is a strong interconnection between the technical aspects that are highlighted as red flags and how they can affect the commercial aspects of the company. So there is a strong interconnectability I can see there. So, Gagan sir, as I would like to come to you next and understand that how does strong due diligence processes separate genuinely investable e-mobility opportunities and those which may appear promising on the surface. So from an investor perspective, what are those components that help you understand and differentiate between such opportunities for your investments?
For example, in one of our investment journey, we came across a very interesting investment opportunity where, there's a very strong moat, a very high tech kind of an opportunity where we felt that, this could become the wow moment. And in that journey, when we started discussing with the founder, he seemed to be very knowledgeable about his subject. And, like Manojji said, know your country, know your, basically customer, know your, the environment, the company. So he had all that wherewithal, knowledge, well read, everything. But, once we started getting a little deeper into it, through and definitely through the structured process of the due diligence, we came to know that these unit economics made sense, but the scalability didn't. At the end of it, make a very commercial play because it required investment beyond today ground zero. That is the year zero. It required investments, scale up, which were very large, and then there were certain regulatory requirements also, which were, would have come up. And so, there we lost, I would say, interest in between. So, well, it seemed like a Elon Musk moment, and a very good, I would say, wow thing. But at the end of it, it didn't really go through. And when you sit back today and you realize, that okay, technology isn't everything. It's about, I would say, a very good, making a very good dish with a lot of good ingredients and, cooking it well. The other, of course, is the fact that, to convince a board, you need to understand one is the founder itself, what is the intent of the founder. So while we talk about a lot about commercial technical due diligences, the founder intent is also very, very important because what does he or she want to do? Whether it's a long-term play for him, is it just taking I mean, in like a valuation game, is it, and how long is it going, he or she going to be there around? So to that extent, when you get into a term sheet, the SHA plays a very important role to kind of securitize that moving forward, especially in areas where you're not having full control. Third is from a point of view of not only the market opportunity but also the market attractiveness, because see, one, the opportunity will be there, but whether the capability of the company to go out and capture that opportunity is very, very important. And there have been cases where we see that there is a huge market opportunity, but then the capability to scale up, the capability to move ahead, and this came through a lot of field information which comes in, which couldn't have come in a a boardroom or a cabin. So these are very, very important parameters, I feel. And other is, of course, the vision versus execution, because like I said, the founder has a big vision and everything, but then when execution capability is weak, that is where I think it all falls short. So execution capability is very important in our industry today. I think Manoj also said this only, the monetization, how the monetization will happen, because on ground at the end of it, you're here for the business of making money. And if the execution falters, then I don't think making money would be that easy. So I think these are some of the parameters, and happy to take some questions. I saw one question on the charging infra as well, but we'll come to that when it happens.
Yes, sure, sir. So that's actually really helpful, pointing out the right pointers as to like the stakeholder, they or the founder, they generally come under pressure to adopt the new innovations and technology quickly, but they may have good unit economics as well, but they may fail to understand if they are really scalable, and the vision might not match with the roadmap. So these are really very important aspects which may not be there on the paper directly, but we need to understand from the investors' lenses as to what their interaction with the with the company and the founders and all those things say. So, Manoj sir, like as we now understand some technical red flags, the financial aspects, and also the investors' view on, how these processes and how what are their strategic views on these areas. So, from an industry perspective, we would like to understand how can industry stakeholders strike the right balance between adopting an innovative technology quickly and ensuring they are scalable, reliable, commercially viable, and also strategically aligned with the long-term success, and not just something that we are just looking into at a very short-term level. So, like there are quite a few pointers that have been covered by our other panelists, but I would like to understand that from an industry perspective, that how that balance we can strike in.
I think the balancing word is exactly is like a work-life balance. We need to understand and appreciate the kind of industry in the business what we are talking about. Firstly, we are not in a 2 minutes noodle industry. Second, we are not in a 10 minutes gig economy. So if we can understand the fundamental difference, 2 minutes to 10 minutes, this is not our way of journey in this industry. This industry needs consistency from day one in terms of, from an ideation stage to giving it a real implementation phase. Because fundamentally, we need to, again, I'm just trying to iterate my earlier conversation point. This is an ecosystem, okay? And this is not a business of today you have just by some mean you secure some order, then activate your supply chain or a sourcing guy to just go to the market and do the shopping. So please understand, if we are going and preparing our businesses with this mindset of a sourcing strategy, supply chain strategy, so we are entering into a very, very risk avenue. This is an industry before the real business. Your preparation phase, your planning phase is huge. It demands huge thing. In terms of what? Because this is a two-way industry. Lot of integration, validation, adaptability, lot of interoperability, lot of benchmarkings, lot of assumptions. Okay. It is not a one size fit for all. A two-wheeler product portfolio and a bus and truck portfolio, or even for that matter, the segment wise, a school segment or a employee transportation or a public transportation. You just name it. In everything, you need to create a differentiating factor. So it is not a business of if he can do something, if he can make money, I can also do it. And it is very simple and very, way of just getting in, being there. This is a business year on year demand, huge cost optimization. We are being evolved from a government support ecosystem, from a tendering process to a private business now, to a public business, to a global business. So what take you there? You are absolutely right readiness to see the future ahead. The business may happen after 1 year, but the preparation to be there today. So this kind of a planning and your readiness with your resources, with your things, and then see the whole value chain putting together with the real impact when you actually go for implementation. Because between the planning and implementation, this particular journey, we all always talk about journey between a sales cycle. We all may be knowing this sales cycle was very tough. It took me 1 year, 18 months, 24 months, this, that thing. But how many remember an implementation cycle from a planning to implementation? So this business needs that readiness. A. Second, how good we have invested on our resources, the people. Because this is a people's business. This is not just a product business or not even just a service business. It is a mix of product, service, digitization, and lot many things which I even don't have a word. They all come with the productivity. This all will come anything. I think if you go to the AI, that may give you 1,000 words, but need for immobility to do a business. So my submission for these things, When we see a technology adaptation, a product introduction, we have to start thinking in the way I have positioned my 5C. You have to have think from a country perspective. Whatever I'm going to do, how it is aligned with my country objective. Because if you will only think from your own, particular business or your own function or something like that, so it means you have narrowed down your that particular approach of sustainable practices that need attention and to be adopted. And you have just taken stand based on your own limited exposure in that way. So it needs those attention, because just to give an example set, when we started in 2008 in this journey, we were the only company who pick up CCS2 standards, and today it is a reality, whereby there were choices to pick up GBYT, CHEDMO, or even the technology-wise, the battery swapping technology, pantograph technology, and DC-DC fast charging. And people were talking about 3.3 kilowatt, I still remember, to 11 kilowatt and 50 kilowatt, so matlab, something was very, very big, something everybody was imagining a huge thing. But we started with 120 kilowatt. So today I feel, really, the word which should I say, feel good, at least for our country. We have created an infrastructure which is the largest in terms of DC fast charging network, the largest fleet we are operating, the largest skilled people who are managing it 24/7, with the latest in the technology. And every 6 months we have introduced new technology. So that is how your learning should not stop. Every new depot, today I am operating around 60 plus depot. Every new depot we have bring new innovation, new change. And that is where almost every week we have a foreign delegate visiting our depot. So this is the pride we are bringing back to our country in terms of demonstrating that as a country together, we have created an ecosystem of industry readiness, which has deployed used cases, whether you use it for training your AI modules or other stuff, or take this whole ecosystem to the global market. And even I'm going global. We have already taken step forward in APAC, in Middle East, and in Europe, everywhere. So we have already started putting our footprint and giving a good competition to rest of the world. So this is all happened because of our good execution, our benchmarking, and our learnings in India, which is the best. So very proud of our country. Thank you very much for inviting in this particular event. Thank you.
Thank you, Manoj sir. Thank you for sharing the important highlights from the industry's perspective as when it comes to adopting an innovative technology and scaling it. So given in the interest of the time, we might not be able to take up a lot of questions from the Q&A section. We will try to share all the answers to the Q&A section via email to all our participants. Thank you to all our panelists for sharing their valuable perspectives. That has really been a very insightful and interactive session for me, and definitely for our audience. So if I summarize this, that today's discussion has clearly highlighted how technical and commercial due diligence helps stakeholders assess technology, assess the technology readiness, the business viability, scalability, its market fit, enabling informed decision making across all the e-mobility parameters and across all the e-mobility ecosystem. So it has emphasized that the long-term success in the EVs depends not just upon the innovation, but also how robust the technology is, the sustainable business models are, the execution capability, the regulatory compliances, and the overall ecosystem readiness. So a key takeaway is very simple from this. We can say due diligence is not about finding reasons to say no, but it is more about building confidence to say yes for right opportunities. So thank you all for joining us today. Now I would like to hand over to Vedanti for final closure and any announcements. Over to you, Vedanti.
Great. It was indeed a great session. And we started with exploring what truly makes e-mobility opportunity investable. And throughout today's discussion, it became very evident that the success in this sector goes very far beyond innovative technology itself. Strong technical and commercial due diligence, scalable models, etc., and execution capability, and some of these factors that ultimately determine whether EV venture can really create a lasting value in this area. I sincerely thank all our esteemed panelists, Jayan sir, Pradyumna sir, Gagan sir, and Manoj sir for sharing such insightful perspectives, and from highlighting the importance to the technical validation, scalability, founder intent, um, to emphasizing the total cost of ownership, market readiness, and all these areas. Your everyone's expertise has really provided our audience with a very comprehensive understanding of the opportunities and challenges which shape the entire future of e-mobility investments. I would also like to thank our moderator, Sunaina, for steering this engaging discussion and ensuring that both the strategic and technical viewpoints were brought together very seamlessly. Finally, a very heartfelt thank you to all our participants for joining us today. Your enthusiasm and thoughtful engagement made this conversation really impactful. And we really hope that the insights shared today will support more informed decisions in building a robust and future-ready e-mobility ecosystem. And with this, we hope the session gave you new perspectives and sparked ideas that you can take forward in the respective domains. Thank you once again for joining us, and we look forward to continuing this dialogue and engaging with many of you beyond this session as well. And before we close, I would quickly mention that EVA CAD, which is our learning arm, offers specialized programs for professionals looking to build expertise in broader energy transition. And please find the details in the chat sections for the same. Thank you once again and have a really wonderful evening.